We saw, been following up. We were talking about the markets being a week where we might see some things reset. So focusing on gold, there were several things that finally developed and set up nicely yesterday into today. But looking at it today, let's just use gold as a good example, so we can do a nice little breakdown of the trading that we've done. So we had here drilling up to the. Let's go to the weekly actually first off. So weekly is really nice. So we've had here the bounce up off that 61.8 key support. So we knew that would happen from around 1690 area. That would be our a place where we take profit shorting over the last so many weeks. Been it's been fantastic. Gold's been giving. It's like an ATM machine. It just keeps providing. So we have that. We have the bounce up, and this is where we're at. We've taken out the previous highs. The previous swing highs, and we've finally gone up to make a new high, and it's retesting a previous structure here seen on the daily. And because we were looking at the daily chart yesterday coming into today, I wanted to see if it was going to fail and give us a reversal candle, which it has, and it did. But drilling down further, going to the 4 hour, you'll see that if we take these fibs away, we were looking at the fib extension, weren't we? Yeah, we have been, haven't we?
Yeah, it bounced on the 1618.
Yeah, it did.
Yeah, that's what it started to show resistance. Yeah.
So remember, we were trying to
That's
take this.
the that's
Yeah.
why. Yeah.
So we were trying to take this long, weren't we? We were
Yeah.
trying to take it up from here
Yeah.
to the first target around 1724, and then higher still we were looking for a move up to around 1740s, and the reason being that we were looking, if we look at that previous range, the 50% was at 1746, so we were looking for of the bigger picture some sort of a move up to around 1746. It did stutter though, and it stalled. It got caught up in our little zone up here, our 161.8 extension, 176.4 extension. So that was quite nice, quite beautiful to see. So that's why we need to look for any signs of reversal, any signs of fading. And then we rightly also noted that, okay, it's taken this previous swing out, so we know it's going to go up higher, or there's a good chance that it will, and we've noted that, so that's fine. The other thing we were looking for was any last pullbacks, which usually we're looking for highs that take out the previous highs. So here, and then going back here,
Yeah.
we've got up, and so this was a really notable one. It's never an exact science. It's not always an exact science. So this one here, I was saying to one of the other guys that we've had this pullback, but it didn't quite take out this. But because of this sharp move down, and then we've had this notable reversal, we've got a few going on here. But because we're now going up, this one comes into play. I'm interested in it. And so what we did over the last few days was we took that and we plotted it like that. We put the fibs on, didn't we? And
Yeah.
I'm not sure if you saw this yesterday, but we had this set up like this, and I did post analysis in the analysis room to show that we were going to go up to around 1740, nice round number. Also, if you look left on the chart, you have a nice area, previous testing, previous structure. Looks
Yeah.
look
Yeah.
looks pretty good. So
Yes. It is. Yes. Yeah.
so we're interested in getting short up here, and we just need to allow for the news to come and do its thing. And the news has been good. The U.S. news has allowed. Well, it's allowed. Why is this not moving? Can't seem to move anything at the moment. Oh, this is no good. Let's just play it. Let's see how it plays out. So we went up and we're touching here, and so we've got a 764 strategy now coming into play. Again, it's just probably missed it by about a pip, not even a pip, half a pip even. Just it's done its bit. So it's slowly going down. So we're looking for entries, and we're looking to get in, and we're looking to short it there. On top of which we have divergence. So that is the divergent strategy that we talked about. So this divergent strategy is giving us an opportunity to get in with divergence strategy as well. So 764 in play, we can get rid of that just because that's done. So we're going to focus now on the downside. But before we even do that, just to go back to, if you recall what we just showed with regards to divergence, if I just remove these levels, because people need to understand sometimes I always try and explain dynamic, using fibs in a dynamic manner, meaning that we've used it there, we've identified the 764, we've used it here to identify divergence, which we have on the 1 hour beautifully here, and we've gone up and we've got caught up in this lovely area. So first target to the downside would be 1715, so that's what we were shorting to as our first go-to profit area. Now, the thing that people seem to struggle with is, but when do I get in and when do I get out? How do I know? Like, more of an entry than anything, sometimes they're a bit scared. So I said, well, it comes with back testing, doesn't it? If you're back testing these strategies over and over and over and over, then you'll start to recognize it. So a lot of trading is about, a lot of it is about observation. So we've observed that the price has gone up to the 764 of the last major key range as an area, but that for me is not necessarily enough. But what we have on top of that is this divergence. We've taken out that last swing high. Is it going to go higher? Well, we've got the divergence, so I expect at least a pullback to 1715, which is great. And so we've got that as well. In terms of entry, the more aggressive trader, the more confident trader, would be looking to short at the highs, pretty much up here somewhere, around 1740. The more conservative the trader would probably be looking to get in on this consolidation and any little pullbacks, and maybe get in at around 1725 to about 1728 even. So that, there are a couple of entries. So it is subjective in terms of entry, because I think people want the holy grail. They want, when they say to me, but your strategies, it's all like, I can't get it to work and I'm not having success. And I'm like, so share your charts with me. Show me where where did you enter? Where did you exit? How have you got your fibs plotted? What are you looking at? And often you'll find that it's different. It will differ. As long as it doesn't differ too much, that's the idea. With plotting your fibs, there's not, it's not too subjective. When you plot your fibs like you had your fibs plotted in the same way I did, looking for those extension levels, it was a no-brainer. Yeah. You take the high, you take the low, and it gives you the projection to the upside. Job done. So these things you can't go too far wrong. If you're using other forms of support and resistance, other ideas, order flow, order blocks, which are the supply and demand, you're doing things which are, I might do this. Somebody else might come along and they might do that. Subjective, very subjective, because you're talking about maybe 30, 40, 50 pips different. This is my argument, which I say to people. I use that as a secondary confluence, and that's the precise reason why. But each to their own, because it might work for them. And generally, if it works, it works. But I say to people, it's time to stop bullshitting yourself as well. Stop kidding yourself. I mean, you're saying, you've got this strategy going on, and this seems to work, and I prefer to do this. And I'm like, yeah, but when all is said and done, is it working? The simple question is, Are you profitable or are you not profitable? Are you making money or you're not making money? If you're making money from your ideas and by using stuff like this, as opposed to maybe using the fibs as your primary tool, then great. If you're not making it, then it's time to start looking at other aspects or keep refining, back testing, whatever the strategy. It's about back testing, and then like that will bring us to here, where will your entry be? More confidently, aggressively. Aggressive is probably the wrong word, because you've got the entry where you need it to be off the 161. Fine, up here somewhere. Or will it be a little bit more conservative? Wait for a little bit more confirmation, then think, you know what, this is going down. I'm gonna get in on this. I'm gonna short it and start shorting it. But then once it broke here, it was a no-brainer. With all our analysis, despite whether you got in there or got in there, we're basically saying, okay, yeah, we're going short. And where are we going short to? Well, we're going short to the key fibs. So the first fib is going to be always the 38.2. And because that tied in with our divergent strategy, 1715, that was a good target, because we had two strategies working hand in hand to give us a decent level. and then yeah, oh, bear with me. I don't know what's going on now. I'm just going to mute that a minute. Then yeah, next target is the 50%, which was this morning, and I said to people we may see a bit of a bounce here off 1708 area, so a good T1 would be around 1709, which I shared that, and if we drill down to the 15-minute and the 5-minute, we can start seeing a bit of consolidating, thinking about it. Is it going to go up? Well, we saw it bounce off there, then we saw it go back and retest, then we had like a little mini double bottom. And then it bounced again. It looked like it was going to start going up, but it failed. And it gave it up, didn't it? So the next target, once it breaks that 50, is to start targeting the 618. And the 618 is a good one because we've got a lovely, juicy 1700 round number. So you know it's going to get there and bounce off it. And it's a good place to take target, take some more profit. Or if you're getting in late as a target, it's a decent target. So the good thing about these strategies as well is that even if you're getting in a little bit late, or you want to be conservative and you took it here somewhere, or you get in here somewhere, or break of the 38.2, which is always a nice classic marker. That's for our MT strategy as well, which you can start bringing in your MT strategy into play here once it breaks the 38, looking for that 764 ultimately. So in effect, it is combining all three strategies in terms of price action. When you start looking at it on a lower time frame, like a 15-minute chart, or seeing it here on a 5-minute, quite powerful stuff, isn't it? And it's quite decent. So, is that it? Are we done to the downside? Well, it doesn't matter. The point is we've made money on it because we've correctly identified using the strategies to help us get into this move and to capitalise accordingly. That's it. We don't really need to do anything else. So if I show you on my charts, multi-time frame analysis, take the daily, gold, we saw the reversal, it gave us a reversal candle. Show you that a bit clearer. Daily, we're looking for a failure, we're looking for the reversal. We got that, didn't we? So that was an added confirmation, a confluence, massive confluence though, really powerful. So that's what we wanted. That was almost like the final nail in the coffin for gold in terms of shorting it. There's our divergence highlighted on the 1 hour. Really nice. Got the signal there. Let's short it up here. That was a decent entry at around about 37. And take it down as seen on my 4-hour chart. This is what we're currently doing at the moment. This is in play. Oh, where's it gone? There we go. It's in play, and it's doing what we need it to do. And people were asking about divergence as well, and so you've got to look at it here. Here it is, the Awesome Oscillator. It's such a great name as well. Awesome. It is awesome. It really is. So that is just, it's just art. When you look at a chart, I look at these charts and I just see art. I just think it's a form of art. And it's money, it's money right there. You're printing money. So I heard today about some online art being sold today for about £50 million. So that's digital art. So you don't actually physically hold anything or own anything. You've just bought something which you see online. It's the same principle with trading. So hopefully that's been really helpful. That was a simple case study, simple step-by-step breakdown. That's a really nice setup, covering a lot of aspects. And hopefully, I'm going to record that now and I'll share that with everyone else as well.